Welcome to the Trust Us, We're Professionals podcast with your friends from SSC, CPAs, and advisors. This is a podcast where we break down financial matters found in pop culture. Basically, we make complex financial matters easier for our listeners to understand. I'm your host, Chris Underwood, a financial advisor with SSC Wealth, and I'm once again joined by Michelle Hammond and Chris Cohart. Michelle, Chrissy, how we doing?
Oh, I think you just found the word worse than Shelley.
Yeah.
I mean,
Chrissy is not, for all the Chrissies out there, totally respect you enjoying that word. But that, when my father wanted to get under my skin, Chrissy, why'd you let that guy catch you from behind? Chrissy, you didn't, why didn't you do that? Like, that was the jab.
Oh, I feel bad now.
You went bad.
I went back down to your childhood. Okay, let me do it again. Michelle, Cristobal, how are we doing?
Cristobal, I like that. I've never used that term, but I appreciate that.
Okay, in today's episode...
It feels like I'm the Count of Monte Cristobal.
Oh, yeah.
Ooh, I like that.
That's
the Count
deep.
of Monte Cristobal.
Yeah.
That's deep.
Yeah.
Mm-hmm.
I feel like you should have that like embroidered and framed in your office.
I feel like I should just decorate my entire office, redecorate it now with that in mind.
If you start
the
going...
count feel? Kind of
Yeah.
like, yeah.
And like the entrance of my door has got to have you like gold and silver, just framing.
Well, when Underwood started, we were trying to figure out how we differentiate two Chris's in the office, right? And I pushed back really hard on making sure we didn't call Underwood Hollywood, even though it fits.
Yeah.
You know what I mean? I was like, let's not pigeonhole the poor Californian on day 2 here at the office. I said, so we're going to call him Chris, and we have to come up with a new name for you, Cohart.
Right.
And I think we just did.
Yeah. We can say Count, what was it? Cristobal?
The Count of Monte Cristobal.
I think I'm just going to call you the Count because people won't know if we're talking about Cristobal or Sesame Street.
Yeah.
One.
I just want you to go to accounting meetings dressed like a conquistador.
Yeah. But I come in with like a cape now.
Oh my God, guys, we have an episode to do here.
Okay.
Jesus.
In today's episode, we are going to be talking about cryptocurrency, the taxation, the volatility of it, everything. And I get the pleasure of playing the storyteller in what we are calling Tales from the Crypto. And I'm actually going to try a Crypt Keeper voice. If you remember Tales from the Crypt, I'm going to give it a whirl. So this may not be good, but we're going to try it anyways.
I'll guarantee that.
Huh?
I'll guarantee that it may not be good.
I'll just guarantee that it won't be good. But let's give it a whirl. All right. So hang on to your hats, kiddies. The 3 terror tales we have for you today are bound to keep you awake tonight. That was more Wicked Witch of the West, I think.
PJ's just trying to find new ways to edit that. It was really good. It really was.
I didn't practice
it wasn't bad.
You can't anticipate results if you don't practice.
No,
so we're just going to do it in normal radio voice. In today's episode, I get the pleasure of playing the storyteller in what we are calling Tales from the Crypto. So, hang on to your hats, kiddies. The 3 terror tales we have for you today are bound to keep you awake at night. All right. Our first terror tale involves our favorite bad guy, the IRS, in a story we call When Was It Not Taxable?
That was amazing.
That was really good.
I mean, given the fact that I had never seen Tales from the Crypt until last night and I was trying to watch episodes on YouTube on my phone, I think you nailed that.
Yeah, you're being nice. You're trying to encourage an employee to strive for things bigger.
Keep reaching for the stars.
Hang in there.
My older brother was a huge fan of Tales from the Crypt, so I'm going to leave the judgment to him when if he listens. Although him listening to a podcast about accounting is pretty unlikely. But maybe if I tell him we're doing one about Tales from the Crypt,
He'll be all in.
I'll leave off the last couple, the O. Maybe he'll listen to it.
And we just lost him. No.
So yes, the first story is when, as Chris said, is when is it not taxable? So
Talking about cryptocurrency.
Cryptocurrency. Yeah. To our point, or Tales from the Crypto is all about cryptocurrency. And our first tale, like we've heard so many times, not just with crypto, but in past, I don't want to use the word schemes because that's not right. Past investment opportunities, where clients will come in and say, hey, I can sell this, and someone told me I don't have to pay tax on this.
I hear that all the time.
Right.
I bought gold bars,
Mm-hmm.
and when I sell them for more than I bought them for, my financial advisor, who was selling gold bars out of his trunk, said I don't have to pay tax on this. I've heard that a lot.
Yeah, I feel like there was one many years ago that was gold related. And I don't know if it was bars per se, but it was definitely gold related. But I've heard the bars as well.
Yeah.
But
you do.
But the truth is, it is taxable. Just like any other sale of personal property, there is a taxable event when you make a profit on the sale of this. Now, with cryptocurrency, it's slightly different because it in a way, it's not necessarily property that you own. It is a non-fungible, an NFT in a way, but it is a taxable event. And in fact, in 2014, which was well before the crypto craze that we are currently under, the IRS issued a notice, IRS notice 2114-21, that they clearly interpret, and I use the word interpret because these notices are not guidance. They're the IRS interpretation of the code. IRS interprets cryptocurrency as a property, as a physical property for federal tax purposes, which means that because it's a property, then you have to follow the tax rules for gains and losses in the sale of property. Those rules now apply to cryptocurrency.
Mm-hmm.
What if you purchase cryptocurrency as an investment? Change anything?
Yeah, so that's what makes, I think, to me, crypto one of the more interesting properties that you might own is that, I mean, there's always situations where you buy a piece of a car for an investment. But I think crypto has such a broad landscape of what it's utilized for that it does make it a little more difficult on the taxation of cryptocurrency as a whole. So if, like you said, if it is bought as an investment, like most people are going on, I think Robinhood now, you can buy crypto in Robinhood.
Oh, I didn't know that.
Right, but Coinbase is a big trader of Bitcoin. There's
Coinbase is on. I mean, it's a stock you can buy.
Yeah. Blockfolio, I know, is one that is really big, and I think they may be the largest of trading of. I mean, it's a blockchain, Blockfolio, of buying and selling crypto. So if you're just the average person going and buying crypto and selling at whatever price you want, that becomes an investment, and you're following the investment rules because that at that point it's considered a capital asset, and then you follow the capital asset rules. So if you bought it today and you sell it tomorrow, that's a short-term capital gain. If you sold it for a gain, if you bought it today and hold it for a year, you're going to pay long-term capital gains on that investment, not stock, but on that investment that you've made. What's interesting, what does separate cryptocurrency from IPO is, and this kind of came out when, for the last year, crypto is really inched up, and then skyrocketed up. And then we had this huge lull in the price of cryptocurrencies, Bitcoin obviously being the main cryptocurrency that everybody knows about. But when you sell a stock for a loss or an investment for a loss, you can't rebuy that stock back because then it would be considered a wash loss. So you can't buy and sell those and try to get the upside again and defer the upside once you've bought it. So it does have a wash loss rules for investments. But because cryptocurrency is not technically considered, in a lot of people's eyes, there's obviously very much interpretations, but if you go through the code, it's cryptocurrency is not a stock or security, and the wash loss rules specifically speak to stocks and securities that are subject to wash loss rules. So in theory, you could have sold your cryptocurrency, your Bitcoin, when it dropped, take those losses, harvest those losses, and then buy it right back and not have to be subject to the wash loss rules. Somewhat of a loophole to treating that as an investment because it isn't considered a stock or a security, which is interesting.
Yeah. Well, I think, there's a lot of rumblings from Washington that how crypto's being treated might change.
Absolutely. Yeah. Right now it's somewhat speculative. The Senate did pass I mean, today's date,
Mm-hmm.
they did pass. It has been passed the Senate, but it hasn't passed the House. And it's not that they're changing how it was treated, but they're changing the reporting requirements, and not necessarily reporting requirements on an individual. They're really reporting it on the brokers of cryptocurrency. There's a lot. They're going to start requiring them to be reporting, just like when you get a 1099 from Fidelity. Fidelity is also sending information to the IRS. They're sending a 1099 to the IRS that shows here's the dividends that were earned during this year by this individual, so they can cross-reference that with the return that you file. That's not necessarily happening right now with the purchasing and selling of cryptocurrency. So the current proposal that passed the Senate is those would have stricter reporting requirements on those brokers.
Not actually. Excuse me.
Sorry.
So it's not actually turning it into a security and giving it that kind of treatment. The SEC Chairman Gensler has talked recently about why he believes that there's enough similarities between cryptocurrency and Bitcoin specifically that would allow the SEC to govern this market. But right now, as it currently stands, the SEC can't, because there's legal opinions out there that it is not considered a security as it relates to governance by the SEC, and that securities are limited really to bonds, stocks, and things of the like.
So this is still very much a fluid situation.
Yeah, and the new infrastructure bill doesn't address that. It just really addresses the taxation components and the reporting that Chris was talking about. So Congress would have to get their act together to pull that through in a separate one, and I'm just not going to hold my breath.
Well, let's talk about some... I'm sorry, go ahead.
The other thing about it as an investment, a lot of times people will trade cryptocurrency. Mm-hmm. So maybe you had a Bitcoin and you're selling it for, what would that be, 10 Ethereum? What is that? Ethereum.
He said like urethra.
Yeah, I didn't even come close.
That was
rough.
Yeah.
Why are you trading 10 urethras?
And they believe that is a like kind of exchange. I'm trading cryptocurrency for cryptocurrency.
One for another.
Right. But even in that situation, that becomes a taxable event. It doesn't matter. Prior to 2017 tax cuts, I would consider that a pretty creative thought. That I bought a truck and I'm trading it for another truck, and that would typically work. But those rules didn't necessarily apply to cryptocurrency, because really one of the things about cryptocurrency is they are very unique. They're not the same thing. So you wouldn't necessarily have been able to pass the muster to utilize the like kind of exchange if trading one cryptocurrency for another. Mm-hmm. Obviously, if you sell it for cash, that was a taxable event prior to 2017 job cuts and job.
That one.
Yeah. What is that one? The
TCJA.
Tax Cut and Jobs Act.
Mm-hmm.
But before that and after the job tax cut, it was still, for cash, it's still a taxable event. After the 2017 tax cut, it really didn't matter. They eliminated everything from the like kind exchanges other than real property or real estate. So if you wanted to try to pull that off prior to 2017, pretty creative. I don't think you're gonna fly with the IRS. But after 2017, it's not even consideration.
Okay.
So those are the people that buy and sell crypto. This is the thing that I don't understand how this works. And I have clients that do this. The act of mining Bitcoin and coming up with it that way.
Yeah.
Which it doesn't include a mine or a pick or a shovel or a person. So they're mining Bitcoin and money is falling out of the sky.
Right.
This is what this is.
So I read
what happens when it falls out of the sky, Chris.
Right. Before, it wasn't research for this. In my free time,
which is
we were having this
plentiful
discussion. Blaine at the office and I were having a discussion about cryptocurrency, and he sent me like this 60-page study that really talked about what Bitcoin or cryptocurrency really was.
TLDR. Isn't that what we say? Too long, didn't read?
Yeah. I don't think I got through all 60, but I got through a lot. And so the meat and potatoes of what a Bitcoin miner is, this is a really simplified version,
Which is what I'll need.
is what it really is that there's a person,
Mm-hmm.
and maybe they're not doing it, but there's a computer that has been established that solves a complicated mathematical formula. And if you're the first person to solve that formula, you're rewarded with cryptocurrency.
And it's
I would be broke and not able to eat if you were rewarding me based upon that's how I was making my money.
Right.
But
So
the computer.
The computer. So it
Aha.
and what's interesting about that, I mean, obviously the faster the computer, so the more energy you use, like it takes a ton of cooling. There's a lot. You can't just go buy an IBM computer and hope that you're going to be the first one to solve this problem.
Okay.
That's just not really likely the case. But if this is what you're doing,
Mm-hmm.
the likelihood is that you're not, like I said, you're not just somebody that pulled out their 1980 computer and said, "Hey, I'm going to start mining Bitcoin." You're probably you've done a significant investment into some technology because this is what you want to do. You're probably establishing a business.
Okay.
And so every Bitcoin that you're being rewarded is really Bitcoin you're earning for providing a service. You're not, in a sense, not providing a service to anyone in particular other than the blockchain or the
Right.
digital world that it is to solve that complicated puzzle. But when you receive that Bitcoin, that would be considered ordinary income tax to you at the fair market value of whatever you receive, whether it was the fair market value of the Bitcoin, the Dogecoin, whatever the case might be. That becomes a taxable event from ordinary income tax purposes. And if you are deemed to be a trade or business and it's not, say, a hobby, which that's a lot of money to spend on a hobby, then we spend a lot of money on hobbies. That's probably not. But if it would probably be subject to self-employment tax because it becomes a job that you're in. You've established a trade or business and you have a profit motivation to be doing what you're doing. So it would be subject to ordinary income tax, both federal and state, and really probably self-employment tax. But when I think of Bitcoin
Yeah.
miners, just off topic, it makes me think of, do you remember that movie War Games with Matthew Broderick?
Yeah.
That's what it makes me think of. And I don't know why. Like it feels like it's just the computer's talking back. You've solved something.
Right. I mean, I wouldn't be able to look at it and be like, "Oh, that's right, you owe me money," right? Like, there's a trust level here with this process,
Right.
of the computers taking over the world. Okay, so you mine, you get your coins, you get 10 coins on a day where Bitcoin is at 10,000 a coin, right? So 10 times 10,000, is that $100,000?
Yeah. We probably could have used easier number, like one coin.
I added a zero, Chris. So like, PJ's over there, fingers ready. He's got this. He'll help us. So then I mean, that's income, right? And then I get to offset my expenses for all the electricity that I'm using and ruining the world with for mining Bitcoin, right?
Yeah.
And so now I'm at $90,000. So then I pay ordinary income tax and self-employment tax on that.
Correct. Yeah.
Okay, ouch.
Now, an added ouch to
Okay.
that is that in the event that you get paid with that Bitcoin,
Mm-hmm.
if the price of Bitcoin changes, you can either have an unrealized gain or an unrealized loss. So if that coin that you received was $10,000 at the time of service being provided or reward,
Yeah.
and then 2 weeks later you say, I don't really want Bitcoin, I just want to be a Bitcoin miner, I'm going to sell this Bitcoin, and it goes to $11,000, you now have another $1,000 gain that is being taxed in a similar way as if you would have purchased that for an investment. It doesn't become ordinary income tax, that additional 1,000, but it is tax.
Yeah.
It's just not for the services that you provided.
Which has always been the case, right? This is taxation of foreign currency translation and transactions, and now just applied to a lot more people are doing Bitcoin than they are moving back and forth between the yen and the dollar.
Right.
Okay, so we can buy and sell Bitcoin. We can mine Bitcoin, and the act of it coming into our ledger is taxable. And now, I mean, I have a lot of clients, they're accepting Bitcoin as payment.
Right. And we had our first sports athlete that asked to receive his salary in Bitcoin.
Probably because he thought he wouldn't get it on a W-2.
He probably. he was a tight end, or maybe rookie tight end, or an undrafted rookie tight end with the Chiefs. And shortly after he said he wanted to be paid in Bitcoin, they cut him. I don't know if there's a correlation there. They're like, this is too complicated. You're undrafted. We're just, we
The
don't want to mess
GM's
with
looking for a mine. Like, I get it. I would be if I had an employee come and ask me to be paid in Bitcoin. Oh,
He's also a rookie. It's not like Mahomes. If it was Mahomes, they'd be like, sure, yeah, whatever you want. We'll pay you however you want.
back up the truck.
Yeah, but if it's a rookie, it's like, it's like when someone says something weird on a first date, you're like, this isn't going anywhere. Let's just cut our losses and be done.
Yeah. AMC also has now said that their system is going to allow them to receive Bitcoin for movie tickets, right?
Which is so cool. I mean, they're pandering to their new investors, right?
Yeah.
Which they do it, right? My favorite is at the mall in Overland Park. They have the ATMs where you can convert Bitcoin into dollars. I wish I would have thought of this.
Yeah.
Yeah. I mean, it's like the foreign currency transaction changers at the airport where they're charging you a 20% premium.
It's got the worst rates. You're like, why didn't I do this before I headed to the airport? Right.
And back in the day when you couldn't Google what the dollar to the euro was, you just went with it. And now you're like, whoa, I'm not changing at the airport. I'm going to tell you, whatever they're giving you at the Bitcoin machine at the Oak Park Mall is probably not the best deal that you're ever going to get. Yeah.
Every time we talk about that, I think Brent and I had a friend who was angry at the idea that there was, that ice machine, that standalone ice machine that's outside Westlake here in Lawrence, where you can just drive up and get a bag of ice or get a bucket of ice. He claims that was his idea. And every time he sees that, he's so mad that idea came to fruition.
Well, execute, buddy. I mean, I got a lot of good ideas floating around out there that I need to claim on. But
I think you might have made more money on the Bitcoin conversion idea than the ice machine idea.
Yeah,
but still,
yeah. I mean, Brent was okay.
It wasn't Brent. It was a friend of Brent and I's that had this idea.
Yeah, it sounds like a Brent idea too.
Right.
So, yeah.
But in any case, back to what we were. So if someone pays us with Bitcoin, it's the same thing. It's the same as if you're receiving cash. So if that Kansas City Chiefs tight end had actually received his salary in Bitcoin or any other Dogecoin for that matter, it would still be a taxable event and be subject to the same taxes as if you were being paid with cash, like everybody else, a direct deposit. It would be treated the same way. The only difference being is that your employer is going to have to determine the value of that cryptocurrency at the time of payment that they made to you. So it becomes more administratively burdensome to those employers to try to figure out what the price of that salary was at that point in time.
So all you recent KU grads and Kansas State grads, when you get that first job and you're all excited, don't be asked to be paid in Bitcoin.
Don't make it any harder to hire you.
That's right.
Than it already is. But I think, it adds a different level because they have to value it on the day that they transfer you the Bitcoin in exchange for your salary, right? And then the longer that you hold all of your Bitcoin, it's subject to price fluctuations, right?
Right, which I think is really interesting to that.
So
if I made $100,000 salary,
yeah,
and I got paid in Bitcoin, but all of a sudden the price of Bitcoin dropped,
and you haven't exchanged any for dollars yet,
right? All of a sudden I made
working for peanuts.
You just went from Sizzler to ramen,
right? Which is it's just a really interesting component to that. And I think the same thing with like the AMC that's receiving Bitcoin or cryptocurrency in exchange for movie tickets. They're going to have the same issue, is that maybe they're making more or maybe they're making less for the price of that ticket, depending on the fluctuation of the value of the Bitcoin, if they didn't convert that to cash after receiving that.
Right.
And me being really cheap, I think on the other side of what happened if I would have paid with like one Dogecoin or 50 Dogecoins.
Yeah.
And then all of a sudden Dogecoin like triples in value. In my head, it's like, I just paid $150 for that stinking movie I just saw. And it was, I just saw Aquaman for $150 for my one ticket. That was terrible.
Jason.
Oh, but he's worth it. Momoa.
Yeah. Oh, how'd you read my face? I raised my hand. Jason, $150. Okay, we got a deal.
I think of it on that side. That's a real cost to me.
And it's
we're
extremely volatile too.
Right.
Extremely volatile.
So, like Elon Musk invested in Bitcoin pretty significantly there a couple months ago, right? And said that people could start buying Teslas with Bitcoin, and he backed off of that statement, I think, at some point here. But what the larger companies are doing are having to approach cryptocurrencies in the same way that they approached foreign exchange risk as it relates to where they do business internationally, and have to start up hedging strategies to reduce their risk of the price fluctuations that you see in cryptocurrency. The price fluctuations in the yen to the dollar or the euro to the dollar are so much less than what we're seeing in the price variations for cryptocurrency. So I think it just adds a whole nother level. If you're willing to accept as a small business owner Bitcoin, for the currency exchange risk that you're willing to take has to be part of that discussion.
Absolutely.
To sum up, you purchase cryptocurrency as an investment. It's treated basically similar to a stock. You know, there's short-term gains, short-term losses. You know, after a year, it'd be long-term capital gains. If you get paid in Bitcoin, it's no different than being paid in money. They're just going to assess the value of when you're paid and try to match it up. If you're a Bitcoin miner, same thing. You mine Bitcoin in your mom's basement, eating a Hot Pocket. You just made some money. So I shouldn't bag on Hot Pockets, but no, I mean
you just started a business.
You just started a business,
yeah.
and you started a Bitcoin mining business. You mined the Bitcoin, you gained it. You might as well just gain dollars because it's exactly the same, and it's much more volatile, and it's not regulated really much yet. But I'm sure all of that will change when, in the years to come.
I would agree with all that. Good assessment. Good summary.
Thank you. Okay.
It's like you tested him.
Yeah. Oh, I wasn't paying attention, Chris. Was I supposed to be paying attention?
All right, Underwood. Right. What did we just say?
Right. No. All right. We're going to keep going with the tales from the crypto bit. So our second terror tale takes us on a scary roller coaster ride I like to call the cryptocurrency social media frenzy. And like I just said, it can be easily manipulated because there aren't regulations. Like there's SEC regulations about what you can do. You can get punished if you do things to kind of manipulate the market. Not the case yet. And Chris, you can speak to this. Can you talk about how easily things can change and how volatile it can be just based upon some tweets or some comments?
Yeah, I think Michelle and I have sent text messages back and forth. Like, did you see the price change after that tweet?
Right.
The fair market value of, I think more because Bitcoin is such a premier, it's the most known cryptocurrency. I think you can see the change in Bitcoin, but Dogecoin really had a big change too in this last year. And all of this can be really detailed just from Elon Musk tweets.
Yeah.
For both Bitcoin and Dogecoin.
I mean, because the premise is that stock prices, there's SEC guidance surrounding forward-looking statements and things that you can say about your business that manipulates the price of your shares, right? There's rules about when you have to tell your investors, what you have to tell your investors. You have to talk about who's selling the shares that might have insider knowledge and all of those things, right? And those govern a company's stock. Okay, so that's why sometimes when I see these discussions that move Bitcoin so wildly, just that it should never happen. If it was a company stock, it really couldn't happen, but it's not governed by that. And if people are moving in and out of stock and moving in and out of Bitcoin and moving markets, it's not technically wrong.
Right. But it's the Wild West.
Right. And the minute you buy Bitcoin, you're just stepping into it. You're just stepping into it, right?
Right. Like you said earlier, that Tesla made a significant investment in Bitcoin. We did see a price fluctuation upon that purchase by Tesla or Elon Musk. But subsequent to that, on May 12th, Elon, should I call him by Elon? We're not on first name basis.
Mr. Musk.
Mr. Musk tweeted that Tesla was no longer going to accept Bitcoin as payment. And that price dropped by 15%.
Right.
So one tweet. 15%.
One tweet dropped it by 15. He moved the market. One person moved the market 15%.
Yeah.
And then on 3 days later, he said that they had sold.
JK.
Well, this is when he said that they had sold
Oh, yeah.
part of the investment that they had made. He had touted it as a great investment.
Drove up the price.
Drove up the price. And then he sold it. He implied, he didn't say they sold it. He implied that they had
Exited.
Yes, their holdings. And the price of Bitcoin dropped to the lowest point since February of 2021. So in that time period, you saw a significant market movement over just 3 days by one person. And a month later, he then came back and said, yeah, well, actually Tesla is considering accepting Bitcoin again when those miners that we now know everything about, what they do and how they do it, when they start utilizing clean energy to do their mining, their Bitcoin mining, that Tesla would consider accepting Bitcoin as payment. Price of Bitcoin increased 8% in that day because now, again, he's just moving the market of Bitcoin.
And to just kind of sum this up, if someone was doing this with stocks, publicly traded companies doing things that would manipulate like things like this, they'd be in big trouble.
Well, Elon got in trouble for it, didn't he?
He got in trouble not for this.
Not for this, but for the...
Yes, he had been fined by the SEC before.
Yeah, for saying it about Tesla, about them being
That's
going
my point.
private. Yeah,
that's
right.
my point, though, is that you say it about, but since Bitcoin is the wild, wild west, it's still like there's no punishment here.
The rules don't govern it.
Yeah, that's right.
Yeah. So you just know what you're getting into, right?
Right, and I think Elon had then, after he would kind of talked about Bitcoin and the ups and downs of it, he started touting the Dogecoin. The joke that Chris said was a coin that was kind of a joke initially, and it's less than $1 a share. But when he started touting, and I think he tweeted like a picture of the dog, the price of Dogecoin went up 30%. Like it just skyrockets. And then shortly after that, a couple of days, I think, he went on SNL and he made some comments, and the price in the middle of SNL, the price of Dogecoin dropped 20%.
I love the Weekend Update skit where he's on that.
Right.
PJ, can you play some of that?
What is it, man?
I keep telling you, it's a cryptocurrency you can trade for conventional money.
Oh, so it's a hustle.
Yeah, it's a hustle.
I don't know. He was pretty bad. I give him credit for going on there and throw himself to the wolves, but come on, that was terrible.
Okay, well
It's funny
he
because
didn't go on it to be an actor. Right? Maybe he did. Maybe he thought that I'm gonna now break into this space. Like I feel like he went on there to be himself, it is kind of painful.
No, it's funny, but yeah, just watching him is painful.
I would agree with that. The whole skit was several minutes long.
Yeah.
And we only saw 20 or 30 seconds of it, or listened to 20 or 30 seconds of that. But leading up to it was hilarious with Colin Jost. Like, hey, I've done some research and I'm really in tune with this. But what is it?
What is it? It's like me when I'm figuring out a minor. Like I get it. It's hard to conceptualize, but it's a hustle.
Right. It is a hustle. That's what it definitely feels like when we're seeing the market change for any one particular investment so significantly by one individual. And it's not just, there's definitely social media plays such a significant role now in markets. Because I think we saw he not of Tesla, but he did send a tweet about another company recently, maybe 2 or 3 months ago, that did drive the stock of that price up 15 to 20%.
Yeah.
Like there are social media influencers now that are having such an impact on the price of stocks and securities and this cryptocurrency that I don't think that we have really been prepared for from the SEC perspective or just a free market perspective.
Yep.
Maybe we should just muzzle Elon Musk and call it a day.
No, he keeps it interesting. You know, this
I'm
is.
just kidding. I kid. I kid.
I kid. I mean, I feel like you just know what you're getting into. I think
Right.
Bitcoin and clearly cryptocurrencies are here to stay.
Mhm.
You know, they are a functioning part of our financial systems. But you just need to know what you're getting into.
Yeah. If either one of you ever read the book, The History of Money,
No, I
No.
don't read like that.
it's really interesting.
Is
It
it?
just kind of talks about the transition of how we initially started. You know, we're trading cows for sheep, and then gold which is still a high standard,
Right.
but we continue to just evolve in how we're actually compensating each other because the dollar is just a piece of paper that is not worth the dollar. You know, it's 5 cents is how much that piece of paper that we have is worth, but we put a value of $1 on
Right.
it. So this evolution is continuing to happen, and it's interesting, but unregulated is a little bit scary.
On that note, our third and final terror tale leaves us feeling unsecured in what I like to call, is there anyone behind the curtain?
That was good.
Yeah.
Yeah,
No,
that's good.
I appreciate it. That's
It's good.
that's what I adore about you, Michelle, is that you're always positive, or sometimes positive.
I'm sure people can argue with you on that point. Yeah, when we were, I on the one full episode of Tales from the Crypt that I watched, I was thinking, this is kind of where you pull the curtain back, and there's the wizard by himself on the stage, turning the box as fast as he can.
Moving the Crypt Keeper puppet.
Right.
Ah. And then, to me, you think about the US dollar and that it has the full faith, support, and backing of the US government, right?
Mhm.
I don't think those are the exact words, but that if anything happens, you come to the US and they'll make good on the dollar, right?
Your checking account's FDIC insured, that kind
Right.
of thing.
Absolutely.
Yeah, of course that piece of paper is only 5 cents, but we're gonna back it at $1.
Yeah, absolutely. And we got enough gold bars over there in Fort Knox to they don't. The math isn't there. But I kind of think about the crypto vault for our cryptocurrency, that somebody finally gets it open and they open the door slowly, the creak, and then the bats fly out and there's nothing to stand behind a Bitcoin, right? No US government, no gold bars, no any government to prop this up. So what is propping up the price of Bitcoin?
Right, and you made the point earlier about private or the publicly traded companies and how you're valuing that and what they can say, and we can. There's always these clear guidelines as to what is this company worth, and obviously the market, the supply and demand of the market, still does dictate valuation of. But you always have something. It's the sales, the price per share is X, or price per earnings is X, and it's reasonable with comparable companies of their size. And with Bitcoin, it's truly just supply and demand. And what's driving the value, as Chris said earlier, that Bitcoin has a specific number. They only have a certain number of coins that are mineable. So the fact that there's a finite number of coins is driving up that supply and demand because the supply is limited. So the demand becomes high when the supply is limited, which is going to drive up the price of Bitcoin. I'm really interested in see what happens when, and maybe this is 30 years from now, 40, what happens when we do get to the end of the mining of Bitcoin? What happens then?
Catcoin? Because we got
Well,
Dogecoin.
Dogecoin is unlimited.
Right?
Dogecoin
Yeah.
is unlimited. So, I mean, Bitcoin, there's the limitations on it, which kind of makes more sense, but Dogecoin could just keep going and going and going.
Which is why Bitcoin, or is why Dogecoin's price per coin is 20 to 30 cents or whatever it is right now. Like that is why that price is what it is. So if we get to the top of Bitcoin and we can't get any higher than this, is the price of that Bitcoin going to go down?
Yep.
And I think that what's interesting, we've said that Bitcoin is finite, but
Today,
I've read, and maybe it's on a dark web website. I don't know.
you're on the dark web.
No, I
That
don't
do you
doesn't
know.
get
surprise me.
there?
It doesn't
I don't
surprise
know.
me.
PJ, how do you get on the dark web?
I don't know. I said that to kind of be like,
You
hip.
can't Google dark
Edgy.
web and say you're on the dark web.
My screen went black.
Well, that
Or I
explains
changed
why
my
I had to
back-
get you a new work laptop.
I changed
you
the
left
backdrop.
it in Vegas.
So Yahoo just went from the white background that always to its black. So now I'm on the dark web. But I had read, that there is some function, some way, and it's well above my head, that they could, in theory, create more Bitcoin and put it in the market.
They're already exploring it. Yep. They're trying to figure it out.
So, like we said, today.
So, yeah, key takeaways here. We need to wrap it up. Obviously, most important thing, just like with any investment, know what you're getting yourself into. You don't want to become one of the Crypt Keeper's terror tales.
You got to do it again there.
Yeah,
didn't you?
that was great.
Yeah.
You guys can chime in with some takeaways whenever you want.
I think that's an appropriate takeaway. I mean, I like Michelle said, this is here to. I think this is here to stay. Whatever version it is, and maybe it's not Dogecoin, and maybe it's not Bitcoin, and maybe it's a new one. But I think we're moving more towards digital. How much of our transactions now are through credit? When it used to be cash, and making that transition to credit, we're just making more transitions. But right now, just be clear of what's behind it as much as you possibly can. Know your risk tolerance. Understand if you're utilizing Bitcoin to purchase or as compensation, what that actually might mean, and the risks for the volatility of that, because it isn't something that we have the backing of the U.S. government or any government across the world. Did China start doing some regulation on that? I don't remember.
Oh, I'm sure they regulated it.
Right.
Show me something they haven't.
And if you don't understand something, maybe it's not the best idea to be investing in it.
Tell that to the AMC people.
Yeah.
That's it for today's episode of the Trust Us, We're Professionals podcast, brought to you by all of us at SSC CPAs and Advisors. If you ever have any financial questions or crypto questions, actually, maybe not those, you can always reach out through our website, www.ssccpas.com, or email us, please do, at podcast@ssccpas.com. Chris, I didn't call it. Either one of you, Chris, Michelle,
Perfect.
thank you very much.
He's still employed.
This podcast was recorded and is being made available by SSC Solutions, Inc., together with its affiliates and its employees, SSC, solely for informational purposes. SSC is not providing or undertaking to provide any financial, economic, legal, accounting, tax, or any other advice in or by virtue of this podcast. The information, statements, comments, views, and opinions provided in this podcast are general in nature, and such information, statements, comments, views, and opinions in the receipt of this podcast by any listener are not intended to be and should not be construed as the provision of investment advice by SSC to that listener or generally, and do not result in any listener being considered a client or customer of SSC. The information, statements, comments, views, and opinions expressed in this podcast do not constitute and should not be construed as an offer to buy or sell any securities or to make any investment course of action. The information, statements, comments, views, and opinions expressed or provided in this podcast, including by speakers who are not officers, employees, or agents of SSC, are not necessarily those of SSC and may not be current. SSC does not make any representation or warranty as to the accuracy or completeness of any of the information, statements, comments, views, or opinions contained in this podcast, and any liability thereof, including in respect of direct, indirect, or consequential loss or damage of any kind whatsoever, is expressly disclaimed. SSC does not undertake any obligation whatsoever to provide any form of update, amendment, change, or correction to any of this information, statements, comments, views, or opinions set forth in this podcast. No part of this podcast may, without SSC Solutions Inc.'s prior written consent, be reproduced, redistributed, published, copied, or duplicated in any form by any means.